Alright guys, what is going on? Welcome to the stream. It is Take Partial Tuesday. And I did not get the run that I wanted. But that's alright. That's alright. And I did record this. And I recorded on my phone too. Because it's been a while since I made one of those kind of recordings. And it was one of those buying below some lows kind of thing. Which was pretty cool. So, in other words, with what you see in the Discord, that's what you see. In that picture I took, there's trailing stops here, and I'm entering, right? Your stop loss is my entry. Yo, Dad, I forgot about that shit, huh? No. I created that. Why slime, baby? Your stop loss is my entry. That's mine. Now, I don't always trade like that, but, you know, sometimes the lion has to come out of his hiding place and show everybody who's the fucking man, right? So that's the extent of that. But anyway, drop some likes on the stream. I'd greatly appreciate that. So that way, hopefully we can get on the algorithm. Hopefully we can get more viewers and stuff like that. I don't know how we're struggling to grow. I don't know how we're struggling to grow, bro. Everything hit yesterday. Silver, all 3 targets for ES and NQ. Like, bro, that's like 5 for 5. Too easy, dog. Now today might not, because I have some pretty I don't know what the right word is. Generous. I would say I have some pretty generous upside potentials for NQ. Given that it's our weakest one today, probably the most volatile one today too, we might not get that. But I'll at least walk you through what I did, why I did it, and, you know, go from there. You guys good with that? Drop some ones if you guys are, if you're good with that. What's good? Naruto, Mason, MJ, Manuel, Felix, Ricky, Remy, Gessner, Willow, Eberneth, Eminem, Monkey, Amin. Dude, I'm starving too, bro. I've been so hungry lately, dude. If you, bro, like working out fucking blows, dude. The results are awesome. Don't get me wrong. The results of working out and eating right are great. But being hungry all the fucking time, dude. Not it, man. Not it. Shit sucks. It's so bad. Like, I just feel hollow. You know what I mean? I just feel empty. Like, my stomach, bro, and my backbone are high-fiving right now. You know what I mean? And it's like, I can't even think straight. You know what I mean? Can't even think straight. All right. So if you didn't know, now you know. I'm just kidding. So we have swapped from March over into the June contract. So the list has changed, right? NQM, ESM, and YMM as well. That's funny to you guys? That's funny that all I can think about is trying to eat and not anything else? Starving, bro. I was doing push-ups the last couple days with the weighted vest on. Oh, man. I don't even want to talk about it, bro. I don't even want to discuss it, bro. Not fun. Okay, so anyway, yesterday in the Discord, there was a image that I shared, and it had a lot to do with this. Okay, it had a lot to do with that. So yesterday's candle, right? Monday's candle. Here's Friday. Here's Monday. We trade lower. We trade into this down candle. And obviously yesterday being bullish, like I told you it would be. That was cool. So I figured, all right, if we're going to continue, we should probably aim for this gap, right? Now that was on the previous contract month. The previous trading contract, the March contract. The June contract has the same gap, same down candle. Almost everything's the same except for the price levels. Okay. But nonetheless, we traded into that down candle again. So for me, all right, what I was looking for is some sort of long that is either at 50% or above it. Because remember, and I know I say this all the time, I repeat myself a lot. Every concept has a premium and discount. Every concept. Okay. So if we have a down candle, we can cut that one in half too. So that's like 19,643. Okay. So this is sort of what that looks like. Okay. So what took place today? Let's actually go to regular for a second. What has taken place today? There's our close from yesterday. Today at 8:30 Central Time, that would be 9:30 a.m. Eastern. All right, we opened with a what? Gap down. Right? We gapped lower. So we could extend that all the way over here as well. Well, this is going to fly now that I'm out of it. I got stopped out of profit, little bitch. But all right. Anyway, I'm not even going to re-enter because I've had enough today. I've had enough of I've just had enough, and that's all you need to know. All right. 19,900.25 is our equities open high. It's our opening gap low. All right. It's the low end of this morning's gap. Do you guys see that? Let's go ahead and crunch this up a little bit. Do you guys see how I got that 19,900 and a quarter? That is our basically equities high of day. That's our equities open high, right? The lowest low and the highest high in the first 30 minutes. Obviously, the market made a lot lower low. So the highest high is up here. Gap, high, all that shit. We have this gap here, and since we're below it, to me, that's discount. 800s, Ricky, I'm thinking 900s to be honest with you. I shared the 19,900 level, either 75 or 25, one of the two. But either way, it's 19,900 if you're gonna round, okay? And then I also shared 19,844. Okay, how did I get 18,000, or excuse me, not 18,000, 19,844? It's just something simple. There's just a small like lack of wick right here. And so to me, I was trying to make that a partial on the way up, like partial here, and then look for something like that. Now, as you know, Jesus, Ricky. Ricky's up nice. Ricky's up real nice. 12 micros, which is basically like 1 E-mini plus 2 micros. That's $20 a point. So that's about a lot. that's what that is. That's what that is. And I guess I'll talk a little bit about that too, Ricky. So I did watch that video yesterday. It's on YouTube if you guys want to watch it. It's from SMB Capital, something about RSV, the right side of the V, which I did find to be interesting. I think the chart examples were a little, probably not the best, but the idea I think is solid. And one thing that I guess I would say about it, it's basically looking for the low risk buy or the first stage accumulation. So it's very, very similar. It's basically getting in alignment with the market maker model, but just using a different way to get there. So remember, this shaded area is the upper half of that down candle. So we have a bunch of lower lows here, right? How many? Well, a lot, but there's a low right there. There's a lower low here. And then you get a third low set here. Does everybody see that? Okay, that looks better. So we get a 1, 2, 3 formation. And then what else do you think the entry was based off of? Yeah, Ricky is balling today. What's right there? We have an inversion, right? I wanted to long inside of it, but I was like, no, I'm gonna wait for it to trade outside of it, and then I'm gonna long on the way lower. So that's why you see the entry there. It was at 42. Okay, so 42 is right there. See that? So we're just below the lows. We're inside the last imbalance on the way lower. Stop at the 1, 2, 3 formation. That's why you see that. So you have confluence here, right? Just move it over. Now I know it does trade outside of it. So what? So what? I told you sometimes price does do that. Okay? But if the stop is at the low, guess what? It never got close. You still had like 30 points of breathing room here. Maybe like 25 points of breathing room. And then guess what? 1 minute of drawdown. Next minute, I'm in profit. And that's it. It never really comes back to my entry after that. See that? And then you have another one right here too, actually. Look at that. Look at that shit. Inversion model. Inversion model. Guess what? All these down candles put together. What does price trade into? All those put together right there. Boom. Look at that shit. Price supporting that small gap right here too. Takes off. And then never. Well, I lied. It does come back here, and that's what stopped me out in profit. But the 1 to 2 is right here at 719 and a quarter, which is right there. Which is simply, again, I mean, it is a new high. It's above this one too. It's not quite above this one here, But remember, that's not what it calls for. That's not what it calls for. The inversion model calls for a 1 to 2 specifically. And that's it right there. Actually, it might even be a little bit less. I put the risk reward up there on my phone. So you know when you're like pressing your screen, it's not always like super accurate. But like that's it right there. You're 1 to 2. Boom. See how easy that is? So yeah, and like I said in the Discord, I was long 3, I partialed 1, and then when we got this new high here, I put my stop into profit and then walked away because I'm creating another PowerPoint. I want to get into like some of the finance shit, like wealth building principles basically. So that's kind of the next project I was working on for members only, in addition to the extension of the 48 laws. So FOMC is tomorrow, not today. Ahmed, our newest SMS member here, dropped some celebratory emojis. Dropped some birthday emojis for Ahmed, our newest SMS member. Welcome. I had moved partials to those 80s and I'm still holding 8 micros to the upside. What makes you confident in longing the weakest other than the context you just gave? I think the other indices were dookie shit. They were super weak. ES did give us some level of manipulation here. In hindsight, and again, everything's easier in hindsight, ES was super solid here as well. So NQ, higher low here. ES, lower low. So technically, from this standpoint, I was longing the stronger one here. So that's why. They both had an inversion there. That's what you see here on ES, right? Takes that low. It makes the 1, 2, 3 formation and then runs it again. So it makes like a 4th low. And then on top of that, it does give us more of a measured move from 56.62, which is some sort of low. Yeah. Oh shit, we're still in regular trading hours. These lows here. See that? So we have those lows and then on a 15-minute time frame, this imbalance right below it. See that? So what I'm saying is you could probably incorporate that low too, even though I didn't. But if you take these two lows, 56.62, 75. Why is it not posting? So 62 minus 10 is 52, right? I mean, that should be... That sounds right. Boom. There's your 10 points below these lows inside that higher time frame imbalance as well. So this to me is, I wouldn't touch this personally here, at least. I don't like this at all. But at least earlier, right? That lunch macro. Boom. Look at that shit. Macros typically do what? Deliver to an imbalance. or liquidity. So we actually take the low and then get an inversion on the way up. So in hindsight, again, arguably this one was probably better because the reward was a lot more than the risk on something like this. And the reason I say that is because I guess now I can sort of incorporate what Ricky made me watch yesterday in that video. So I'm not gonna act like I know everything that they do, expected value, all this shit. I don't even know what that means, to be honest with you. But basically, the way that I understand it is trading the same price at a different time has different risk. And what's interesting about that video is he basically said what I've been saying for years. He's probably been trading longer than me, but what I'm saying is I've always told my students when it comes to manipulation, right? When it comes to entries, I used to tell people I don't typically like trying to buy the low. I'd rather wait for the low to be set and then play a retracement because your risk is more defined. And that's pretty much what he said, just very differently. He said, if you're buying on the way down, he's like, what's your risk? You know, where is your stop loss? And you could base it off of something on the higher time frame, but you're going to have a higher risk, right? A higher number of points or whatever. But if you simply wait for the low to be set, then, you know, here in the Smart Money Stokes community, right, we're waiting for a shift in price delivery. And that's why my inversion model will slap your fucking face off, because that's it right here. If you incorporate this gap in that imbalance here, it trades through both at 1059. 11 opens higher and immediately goes lower. So right at the open of the hour, you're buying below the hourly open in an inversion model, right? After a low that has been taken, where at the same time, at the same time, NQ did not take that low. So either one of these would have worked really well. And so his idea, right? There's a big ass Corvette C8 logo here. In case, can I bring that? Is that okay if I bring that back, chat? Can I bring back like the C8 fucking logo here? It's the V essentially. He calls it a V. I call it a curve. It really doesn't even matter, honestly. Like how you want to do it. But if you're expecting higher pricing, right? What he's saying, and I've taught this too, you have the sell side of the curve and the buy side of the curve. If you're not paying attention by now, this is where the stream gets interesting, okay? I've always talked about it like you have the sell side of the curve and then the buy side of the curve. So he calls it RSV, right side of the V. It's the same shit. It's the same thing, just put differently. Oh, Jesus. He made 10 million last month. I didn't make that much. And he plays the capitulation. You have risk once you find the edge with the shift in price delivery, because what he's explaining is when shorts cover, there is a specific nuance that happened. You join the Discord. Oh, nice. Make sure to verify. And obviously connect your YouTube to your Discord account. Discord user settings, connections, and then sign into your YouTube channel to this one. So anyway, back to what I was saying. This at 1040 is the most recent high when you look at a new low. Right? Let's kind of get naked for a second. Oh, pause. Let's clean the chart up a little bit so we can see the candles. I gotta choose my words carefully. When we see a new low here, okay, see that? That new low, the most recent, well, the most recent swing high, I guess, is this, but that's a super small time frame. overall, the most recent high is here. So the reason that this is important is because if you look at the overall, right, look at it. Look at this shit. We gap down, continued lower, imbalance, can't get above halfway, lower, retracement, lower, retracement, lower. The market's taking a fucking beating. Everyone is scared to long. It looks bearish, right? Anyone who is short, I wasn't short, but anyone who is short that's trailing their stop, okay? That's what's so important about this high specifically. If the market's going to reverse, it's going to attack, okay, liquidity aggressively. It's going to do it fast because the market, all right, market makers, if you will, smart money, whatever the fuck, they want to run price fast so you don't have an opportunity to like think about what you're doing, right? Because sometimes you're like a deer in headlights because you don't know what the fuck's going on. Do I take partials? Do I get out? Do I move my stop? Do I walk away? Do I, end up liking the stream? I mean, what do I do? And a lot of people get stuck and they don't know what to do. And that's why the market moves fast against people, when it moves against the trend, basically. Right? I just don't look at it like the trend. I look at it as who's in profit. If a new low of day is occurring, that means shorts are in profit. So as soon as we get, right, we're inside a macro, as soon as we get a shift in price delivery, all right, we're in an area that is an expected discount. How? Remember, we gapped lower and continued lower. Market's in a discount. Okay? Remember, we zoom out. We have some old lows from yesterday. I lied. That's from the 14th. That's from Friday. That's from 2 days ago, basically. 2 trading days ago. So we're below old lows. Do we short below old lows, chat? Yes or no? Do we short below old lows? Yes or no? Do we look for shorts below old lows? Or do we look for buys? Do we look for longs below old lows? Right? What's one of those rules I gave you? I gave you a lot. But one of the rules is we don't short below old lows and we don't long above old highs. You can do that, but that rule will protect you more than it will prevent you from good trading. So we're below old lows. We just took a low again. What is that? A lower low below an old low. That's fucking turtle soup, dog. That's turtle soup right here. Low end of the imbalance. A lower low below lows. We're at a fucking massive discount. Massive discount. So on a smaller time frame, this is the next available high. And guess what? Remember I said yesterday, I said the market hardly ever takes off without you, without giving you an opportunity to get in or to get out if you're in a bad trade. That's how markets work. Every time frame has its fluctuations. Remember these micro fluctuations that I used to talk about a lot? The best opportunities are going to be in the micro fluctuations. It's where you're entering in the opposite direction of your bias. Okay? You're entering in the opposite direction of your bias, which means if you are bullish, you are long. Well, I am. It's not financial advice, obviously, but I'm looking to long on the way down in a bull market. And that's it right there. This gap incorporated with that imbalance, you put those two together, that's 56.55. We'll just say 56.56 just to make it easier. That low is at 51. Bro, that's 5 points of risk. That's 5 points, right? $250 a contract. That's not bad. That's $25 a contract on micro side. You telling me you ain't got 25 fucking bucks to put on a trade? You know what I mean? Right there. Stop at the low. Your 1 to 2 is here, which is in the direction of a high probability target. There's your 1 to 2 right there. Easy. 11 a.m. buying below the open of the hour. Exiting at 11:11. You know, some of you might like that kind of shit. That whole 11:11 make a wish, whatever. I ain't gonna tell you what to believe or what not to believe in, but 11 minutes of trading, dude, and you could be done for the day. Risk 250, because remember, that's only based on the dollar amount for an E-mini, okay? So you'd be risking 250 bucks to make $500 in 11 minutes. $500 in 11 minutes. Okay? Don't come to me with none of your bullshit, all right? Because $500 in 11 minutes, none of you have jobs that do that. None of you. I never had a job that did that. Again, unless you're like a lawyer or some shit, you're not doing it. You're not doing it. You could probably make $500 in a day. You know, if you're working a lot and doing all this shit, or, you know, you make 50 bucks an hour for 10 hours, I guess, you know, that's possible. But that's a day. This is 11 fucking minutes. You can't beat that, bro. You're not beating it. And that is what, to me, is like, it's just phenomenal. Discount of a discount. You understand? So I'm going to say this one more time. Okay? We got lower and continued lower. The market's in a extreme discount already. Now, that doesn't mean we just go in there and buy shit. Oh, it's on sale. Well, yeah, it might be on sale, but it could continue to go on sale too. From people who are trying to buy, they're trying to catch the bottom. Because that's what people do. We're impatient. We want to catch the low. We don't want to wait for the low to be set because we're fucking dumb. That's just people, bro. That's just how we are, okay? But when you wait for everyone to get out, right? Engineered low, boom, gets taken. Oh, we have a new high, right? We have higher low and higher high. Oh, that's a trend. That gets fucking bodied. Then we have a small trend in here. Oh, maybe the market made a low. Market takes that shit too. Everyone's trying to get the low and they keep getting their shit wrecked. That's when it's like, okay, the market's pushed everyone out here and here and here again. We get our measured move here. So now we're at an extreme discount. Shift in price delivery. Now, I guess, Ricky, let me know if I'm wrong. But now we're on the, I guess, RSV. We're on the right side of the curve. And so, like I said earlier, it's the same price as it was over here on the way down, but the risk is different between the two price points. And let me delete everything just so we can get a little bit more cleaned up here. What I'm saying, okay, these emojis are absolute trash. Or maybe just because my background kind of sucks. All right, I'm just going to use the highlighter because I'm sick of this shit. Okay. What I'm talking about is let's just say the 55 level, okay? Just for sake of argument, 56, 55, okay? As our example's sake. And we'll draw the V again. I think it was this one. Okay, something like that. So buying on the way lower has more risk at 56.55 at 10:56, the time 10:56. It has more risk buying it on the way lower than it does buying it here. So the difference between 10:56 and 11 o'clock is only about 5 minutes, 4 or 5 minutes or so. But the 11 o'clock entry is way superior to this, right? Falling knife kind of entry, low risk, high reward entry here. Is that right, Ricky? Is that correct? Is that what he kind of talks about? Now, mind you, I only watched one video for like 14, 15 minutes. And that's kind of what I got out of that, if you will. Two different, it's the same price, but at two different times, the risk is way different. Cody said no. Cody, you're like 10 minutes behind, brother. We need you to refresh and come back. If we recover 50% of the day on the 15th back from the daily highs, it's definitely there. But after 25-minute breaks, it's almost for sure shorts might be covering. So I think this looks like dog shit to me. The PM session, I think today it looks disgusting. Across the board, not just for ES, but even for NQ as well. Right? Like what am I supposed to do with this? We're stuck between some lows, we're stuck between some highs. Like, bro, what? This is bad for me, at least. Middle of the range, lows and highs. Ugh. I promise you, if I took a loss, I mean, if I took a trade here, I would lose. Absolutely. I feel like if I long right now, it's going to short. And I feel like if I short this, it's going to rally higher. Like, I just feel bad either way that goes. But that's the point in good trading. It's not always about knowing. Bro, I only know like where price is going probably, I don't know, maybe 10% or less of the time that I'm in front of the charts. Because I'm waiting for specific criteria. Once I see the criteria, that's when I'm like, okay, now the probabilities are stacked. Now I know, not really, but I have a high inclination where price is going to go. Then we get that. After that, I don't know again. So it's waiting for very, very specific criteria. And once I get that, then we can do something. But until then, I don't know. Yeah, well, electronic here. And we were below those lows that we had identified yesterday. Yesterday was short-term bullish. I wanted us to keep going today, to be honest with you. But today had different plans. Market open and absolutely ran for that shit. So we're below those lows here as well. Extreme discount. Okay. So what Ricky is saying is this here, like that high and then a higher high here. That's what you're saying? Basically that to that. But look how long we've consolidated here. We've stayed between 640 and 740 like all day. This is, I would absolutely take a loss if I traded this. Beyond everything I've already done. I would absolutely get my shit pushed in. Bigly. So yeah, I would leave this alone. What video are you referring to? Let me see if I can find it real quick. It's from SMB Capital, but they have a shit ton of videos. So it's not really like... it's called How to Increase Profits While Decreasing Your Risk. Let me just copy the link, post it in the chat. Yeah. It's called How to Increase Profits While Decreasing Your Risk by SMB. As in, you're a bitch if you trade without a stop loss. SMB Capital. All right. How to increase profits while decreasing your risk. Experienced trader. So it's like 14 minutes long, and there you have it. I mean, I might dig into some of their stuff. It just depends. I like, bro, you've seen what I've done with charts, okay? Like you see the shit that I do, and there's kind of a reason why I don't really continue searching for ideas anymore. I mean, an entry like that, exit at a new high. I don't know where I put my stop in profit. I don't know. Let's just say it was here. It might have been higher or lower, but it's like I'm buying that, barely any drawdown, straight to profit, stopped out on the rest. Like, again, I don't want to sound egotistical here, because I do want to always be a student, for sure. For sure. But it's like, bro, certain things you really just can't improve on. The only thing I could have done better here is probably I should have waited and played the inversion instead. But that inversion was at 46 or 47. I'm in at 42. So arguably I had a better entry with the drawdown than to get a better entry, or excuse me, a higher price with less drawdown. You know what I mean? So I really couldn't have done too much better there. I really couldn't have. We got the same entry, but Libra got a better exit. Oh shit, that's not bad. Well, what I was trying to do is I was trying to swing. Like I was trying to big swing. I was trying to say in 3, out 1, and then I was gonna wait until 844 for my second, and then I was gonna make 19,900 my final. That was the idea. I was trying to swing. I was trying to hit a fucking home run today. As you can see, swinging for the fences isn't always the greatest idea, but taking partials and getting stopped out in profit isn't necessarily bad. So, you know, there is that. The time compression, opening price theory. Oh, yeah. Well, I mean, opening price isn't necessarily a theory. It's more of a logic, but yeah. So, and stuff like this just really beats the brakes off of a lot of the shit you see on Twitter. All these theories you see on Twitter. So many theories, but yet you're not getting entries better than me. So why don't you stop learning all that stupid ass shit? Why don't you stop like coming up with shit and just follow what the market actually does? You know what I mean? You're trying to reinvent the wheel. For what? What are you trying to reinvent the fucking wheel for? I don't know. People just do what they gotta do. And then yeah, look at Dow just kept going lower today. And lower and lower. Like this is price wise, I mean percentage wise it is stronger. Right? Like we didn't come down for these lows here. But on an intraday, this is shit. Nice little cup and handle up here that got bodied as well. Not that I'll go over that, but you know, it's there. Anyway, let's go take a look at silver. Right? Who's your daddy? Remember that yesterday? 34.46. Remember those highs up here? 15-minute reaccumulation. Boom. We actually launched even higher for the March 14th high. See that shit? Did y'all watch that yesterday? Come on, baby. Flawless. Flawless, dog. This shit is too easy, bro. It's too easy, Chad. It's too easy. That 5-minute inversion, that was at 10 a.m. By the time we were on stream, we were in here. Right? So we didn't do a lot, but we did get the reaccumulation in the evening and then sent for 34.5. Too clean. Too clean. Remember, chat, I'm not always knowing, you know, what price is going to do. But when we take out a low, we get a lower low, right? We get a soup below a low, and we get a shift in delivery aiming for highs. Bro, that's it right there. That's what I want right there. Okay? So, Ricky, I'm interested to know, because obviously the YouTube video that I watched is, I'm not trying to talk shit, but obviously it's very, very incomplete. Right? What are you defining your V with? You know what I'm saying? Like, so for example, when I show you guys the model, right, the framework rather, the market maker buy model or even the sell model, there's specific criteria that we're measuring, right? If we're in a buy model, I'm going to measure from the equal highs or the original consolidation or the low resistant highs, like whatever it is. That, I guess, is the starting point of the V, or that's the starting point and end point of the V, right? So that's what my question is. How do you define the V, right? 15, is that the 15.5? Is that him or is that you? Because that, I guess, from the perspective of a beginner, that would be my question. It's like, okay, I understand the V part where you want to trade on the right side of the V, but how do you measure it, right? Versus just drawing it from any random spot. So I guess if it were me, the way I would have done it is that's my target. That's the lower low below the old low, right? So then I would look for something like this, right? And so sell side here, now we're on the buy side of it. And I've even gone as far as coloring it for you guys as well, right? Something like that. You do know that's what that is, right? Bearish price delivery and then bullish price delivery. You see how that's labeled red and blue? That's why I did that, because that's what it represents. Well, green or blue, it's the same shit. Sell side of the curve, buy side of the curve. So when you're on this side, I'm looking for longs. Inversions, imbalances, both mitigation model or even like a reaccumulation. I explained this to you the other day. You sound like my ex, Ricky. You know, I'm a guy. I listen to shit, but I don't really hear shit. You know what I mean? Like, I hear you, but dude, if we have a call for like an hour, hour and a half, you think I'm going to remember everything from that call? I might be pretty smart. All right. I ain't that fucking smart. You know, I'll take some credit, but I ain't going to take all that credit. You know what I'm saying? It means that the Corvette model. Yeah, the C8 model. The C8 model, that's here. So, so tomorrow, I woke up early today too, so that's why I'm like tired as a bitch. Tomorrow we can do the morning stream, the morning session. I'll do my best to get up. I will do my best to get up for you guys, and we can run equities open tomorrow. You guys go with that? Drop some twos in the chat if you guys want to run some live streaming tomorrow morning with myself and Ricky and I. Got to make a video on the C8 model while driving the C8. I got to give her a bath, dude. She's a little bit dirty. It's like pollen season, so there's a bunch of like dust / pollen, which is really annoying. All right, Ricky. Well, I guess the people have spoken. Oh shit, tomorrow's FOMC. That is true. Well, FOMC isn't until 1 p.m. So there's still going to be something in the morning. But I guess even if we don't find anything, we can at least still have a discussion, or you could probably explain to the people what I tried to explain today as far as like RSV and shit. That would be cool if you want to do something like that. Because again, I don't think it's entirely unique by itself, right? I don't think it's unique per se. But that's what I told you yesterday, where stuff like this is basically the low risk buy or the first stage accumulation. Let's review this shit one more time. Because if you look at this like a V, right? What he's trying to explain on the right side is like trying to be in here, right? That redistribution, buying redistribution, you're fucked. You know what I mean? Like, you're going to take drawdown. You're not going to know if the low is going to be set or not. You might get scared out of your position, but once that low is set, then we get a shift in price delivery, which I probably should have labeled, but I didn't. It's still a lot more labeled than how I got it over the years. You're welcome, by the way. But I feel like that's what he's trying to do in here, which is basically either the low risk long, like something like that, or a little bit after, which is still part of the first leg of accumulation, and then riding the reaccumulation up to whatever the V is labeled as. So I may not look at this in itself like a buy model, but it does act like one. Accumulation, shift, inversion, low risk buy, boom, new high, new highs in a discount. Oh, okay. I see what you're saying. Use the 15 and the 5 to see the true sign of buying. Yeah, I got you. No, that makes sense. I'm not against the 5 and the 15, but I love the 1 minute, bro. I love it even more so because Twitter hates it, right? And that's why I get better entries than probably 99% of them anyway, because I love the 1 minute. But even like, let's get cleaned up again. Even if you didn't see the 1 minute today, it's the same thing here. It's the same thing right there. The only problem is your entry would have been earlier, because I did screenshot this too, you know, just for like my own notes. I did screenshot that. So at 19,660 or like 659, that was what I screenshotted. You see that? And I'm saying, hey, lower low, below some lower lows, imbalance here on the 5 minute. We traded through it, into it. And as soon as we start trading off of it, I'm like, okay, I'm going to screenshot this and see what takes place later. And that was right here at 10:20. So it does go higher. But again, those 1 minute had those like lows for trailing stops, right? So we came back for that, but we still do eventually make a new high here and here. So the 1 to 2 on that, I don't think would have met here. Wouldn't have met. So once I let that go, that's why I dropped down to the 1 minute and said, okay, where the entry should have been, there are lows. So that's trailing stops. I want that. And that's why I did that. So the entry is lower. And if your entry is lower, if your risk is smaller, it makes the 1 to 2 a lot more achievable, like that. But I get what you're saying. I'm not arguing against that. Like I'm not making a case for avoiding the 5 and the 15. I use it. You saw the screenshot. I use it. It's just for entries, I primarily like the 1 minute time frame. Now, once the 1 minute takes off, then I'll go to the 15 and the 5 to watch for management, just to make sure, like, okay, what are we doing on those time frames? That's mitigation. All right, this will be the last question I have, and then we'll hop off. So I'm interested to know what your version of mitigation is. I think, because I don't know when you said that comment. I think we were on the 5. I think we're on the 5 minute. You're talking about this in here is a mitigation? Because the way I've always viewed it is not that. Unless I got it wrong. But I would view something like this, like low, high, lower, low. Oh, my camera's probably right there. Low, high, lower, low. And then I would expect this high to get taken and then act as something for price to go higher. Like that's how I view the mitigation. Here, I'm trying to see what your viewpoint is on that. My stomach is starting to... You might hear it in a second. All that rumbling. Traders get stuck in the first 5 minute run up. Then they're like, for some reason, price pull back. Yep. It almost always happens. As soon as the low gets set and the market starts to reverse, that's when traders who caught the low are trying to trail their stops. They get knocked out early and then the price runs. That is where I want to be entering, not getting knocked out. Okay. Yeah, Ricky, we can do that tomorrow. You can share with the stream that on the stream tomorrow. I saw that oil correlates. I don't think you got that right. Oil correlates to CAD, yes. Why is it when CAD gave positive news, gold sold off? Because news, it's not that simple. Oh, good news for a stock and it goes up, or good news for a stock and it goes down. It's not that simple. If it was that simple, it'd be a lot easier, but it's not. The markets are not that easy or that simple, okay? The market is, in short, because this would take, this takes months to even understand, but the markets are based on liquidity. The majority of the time, the markets are going to trade to areas of liquidity. So the news, it doesn't even matter. Interest rate, whatever it is what it is. Okay. So it's not just gonna be like, oh, interest rate dropped, so dollar went higher or dollar went lower, whatever. It ain't like that, bro. It's gonna be based on where are the stops, where are the trailing stops, you know, stuff like that. And that's why we have rules. Ahmed, I don't know if you've watched the 48 Laws video. It's a free video. It's about 2 hours and some change. But I go over a bunch of rules, basic laws, pretty much. And those laws are designed to keep you on the right side of the market. Logic, liquidity, order flow, discount premium, you know, stuff like that. Because, you know, I'm not trading news. I'll trade after news, but not before, you know? So that's kind of how that goes. But anyway, that's going to be it for me. All right. So you guys stay blessed. I will pull up my calendar. We'll do a Equities Open stream tomorrow on Wednesday. And then we'll also do our normal 1 p.m. EST stream as well. All right. So with that, see you guys tomorrow morning.
walking in the crowd. We are lost and found, but love is gonna save us.